Hi everyone, this is chapter 14. In this topic, we will study about the organization of international business. In detail, we will talk about organization architecture that consists of organization structure, organization incentive and system, organization process, and also organization culture. According to its definition, organization architecture is the totality of the firm's organization, including organization structure. The organization structure will talking about the formal division of the organization that will divide it into subunits. The location of decision-making responsibilities within the structure can be centralized versus decentralized. To establish the organization mechanism, we also will talk about coordinating the activities of subunit, including cross-functional teams or pan-regional committees. And the second one, we will talk about control system and incentive. The control system is talking about the metric used to measure performance of subunit, while the incentive is the device used to reward managerial behavior. The third one, we talk about process, organization, culture, and people. The process here is the manner in which decisions are made and works in performed within the organization. The organizational culture is the norm and value system that are shared among the employees of an organization. And people, the employees and the strategy used to recruit, compensate, and retain those individual and the type of people they are in terms of their skill, values, and orientation. In this slide, we will see that the organization structure can be consist of the organizational structure, process, people, incentive, control, and also culture. In order to make our organization a success, we have to give more attention on these different elements, and they are not independent of each other. The way we try to manage our organizational structure can influence how the people works and how the process will be built, and also how we give their incentive and how we control our worker. And then the type of organizational culture will also sometimes determine how we gonna organize the organizational structure itself. Basically, there are several dimensions of organizational structure. The first one is vertical differentiation. This is talking about the location of decision-making responsibilities within a structure. And the second one is horizontal differentiation. It is talking about the formal division of the organization into subunit. And the last one is integrating mechanism. This is a mechanism that built by the company for coordinating between units. This slide talking about the vertical differentiation importance. The vertical differentiation determines where the decision-making power is concentrated. It can be divided into two types of decision-making, centralized and decentralized. There are several characteristics of each. In a centralized decision-making, facilitate coordination, so there are more coordination between the owner of the company, the director, the boss, to the staffs, and vice versa, and ensure decisions are consistent with the organization objectives. So the head of the company, they usually will share a lot the vision and mission, and then give manager the means to bring about the organizational change. And then it's the manager who deserve and also have an authority to make organizational change, and they can share to the staff and their downline. And then also avoid duplication of activities. So if the decision making has made by the head of the company, then the staffs and the worker just followed. In a decentralized decision making, they have also several characteristics. The first one, it relieves the burden of centralized decision making because the focus of the decision making is on the top management. It's from the owner of the company, the head of the company. Therefore, in the decentralized decision making, the staffs, the manager, the field sales person are allowed to make some decision that has been discussed before or has been given a chance to make a decision in some part of their job responsibilities. It has been shown to motivate individuals because individuals are allowed to make decisions that make them as a part of the company. They can talk, they can give their opinion, and so on. It also permits greater flexibility. It can result in a better decision and can increase control. The example for two companies who conducting and using decentralized and decentralized. Here, McDonald's is one of the example for decentralized decision making. Even though that they are franchise company, that actually they should have to fit with the standard operation procedure made by the franchisor, but they are allowed, the companies, especially in different countries, to adjusting their menus, adjusting their promotional activities depends on the taste and the needs of the market itself. And that's why it is one of the examples for decentralized decision making. And then Johnson & Johnson, it's more considered as the centralized decision making because it require for the staffs to always reporting to the head of the manager, to the head of the organization, and follow all the rules, and then all the job description has decided. And if there's changing in organization, they also need to follow all the direction that came from the top management. And then the other part of the differentiation is horizontal differentiation. Horizontal differentiation refers to how the firm is divided into subunit, how they create the structure in the organization. The organization itself can divide it into functional structure and then product definitional structures. The functional structure is talking about how the company usually will divide it, their subunit, into the marketing division, financial division, accounting division, and then human resource division, operational division, and financial division. This is based on function. They will do their job according to their function in organization. And then functions are coordinating and controlled by the top management. The decision making is centralized. The product line diversification requires further horizontal differentiation. And there are some companies, for example, like Samsung, they also try to adopt different way of horizontal differentiation called as the product divisional structure, because Samsung has a lot of product diversification. So they will divide it, their subunit, into the product category. For example, like the manager for the laptops division, product division, and then smartphone product division, and home appliances product division. This is a figure for functional structure. As you can see, usually the company will divide it, the organization and structure subunit according to the function. And in this example, they divided into purchasing, manufacturing, marketing, and finance. And this is an example for product divisional structure where some companies who have many product diversification, they will divide it, their manager, they divided their subunit into different product category. Just for example, division product line A, product line B, and product line C. And then after that, below that, they have functional as well that will support the activities of each product category. This is an example if the company would like to extend and expand their market abroad, and they will divide it into several different product line, but they will divide it in detail by different areas where they market their product. Just for example, here they divide it based on the product division. But if the product has been sold internationally, it depends on which market, and different manager being assigned to become the leader for different countries, specifically for one or two product. And then if the company is become worldwide, they will use this kind of structure. This is an example for worldwide product division structure. There are a lot of division here, and they divided into domestic market and international market. And another example for worldwide area structure, where they widen their market in really different countries, and they will have a different structure too here, based on the North American areas, Latin American areas. Then one of the example for this is that Levi's basically came from the United States, and then if they expand the market to UK, and they have their own manager for UK horizontal structure. And deeper than that, there is global matrix structure. The global matrix structure is an attempt to minimize limitation of the worldwide area structure and the worldwide product divisional structure. If they already target and marketed their product internationally in different countries, different region, different areas, but also has a lot of product diversification, and then usually company will use global matrix structure. This kind of structure will allow for differentiation along two dimensions from the product division and geographic area, and usually has dual decision making, the product division and geographic area. They have equal responsibility for operational decision, and can be bureaucratic and slow because require a lot of communication. They also have different expertise, different area of knowledge, and can result in conflict between areas and product division, can result in finger pointing between division when something goes wrong. This is the figure of the global matrix structure. Just for example, the headquarters is the only center of the company, and they have marketed their product in different area, but they also have different diversification of product. They will make some cross, so they will decide it, for example, in area Asian region, for Samsung product, especially smartphone, they have their own manager, and then smartphone product in South Korea, they have one manager, and then product division smartphone for Malaysia region, and there will be one manager. And then, for example, Samsung has their own category for home appliances, and they will have their own manager in Indonesia, they have their own manager in UK, they have their own manager in South Korea, and so on. So this is called as a global matrix structure. The more the company has more area to be targeted and the more product they use, then they need to be integrated more. Regardless of the type of structure, firms need a mechanism to integrate subunits. And we can see after this several types of integrating the subunit. The lowest level of integrating the subunit is called as a direct contact, and then the second level is relations, roles, and the third one is teams, and the deeper one and require more interaction, require more communication is matrix structure, where they basically change the structure and created different authority in different based on areas and products diversification. Direct contact has happened when manager of the various subunits simply contact each other whenever they have a common concern. So they just communicate if they have some problem. For example, one area, if Malaysian area communicate with Philippines area, just in case like Philippines have more stock of the product that they can share to Malaysia. Liaison rules is happen when the volume of contacts between subunit increases, Coordination can be improved by giving a person in each subunit responsibility for coordinating with another subunit on regular basis. This is happen when the company has to solve some problem, and they need to have more knowledge, they need to have more insight that cannot be received from their own company. Just for example, in Nestle in Indonesia have faced some problem, and they require to have someone who give insight. So Nestle will invite someone from UK to provide consultation, provide advice for the manager in Indonesia. So they will stay there for maybe 1 month or maybe half years or maybe a year to repair everything that needed to give some solution. And then team happen when the need of coordination is greater still. The firms tend to use temporary or permanent team composed of individuals from the subunit that need to achieve coordination. Just for example, they try to penetrate the market in Asian region, and they have several managers, especially in different countries such as Malaysia, Indonesia, Philippines, and we talk about Asia means Japan, South Korea, and they create a team to make sure they achieve the market share better than before, and it's require more coordination between each of the manager and the staffs, and it can be held for half year maybe or 1 year, to make sure that they really have some strategies to achieve higher market share. And a metric structure, it's happened when finally the organization decided that they need to create new roles and integrating roles as has been informed in the figure about global metrics organization. So they need to create intersection between areas and product. In this slide, we're talking about control system. Control means that we need to always oversee our employees, whether they really do their job, whether they really perform well, whether they really do their responsibility, and so on. And here, there are several types of control that a manager or the business owner can do in order to make sure that the employee work well as has been standard. The first one is a personal control. Personal contact with subordinate and mostly used by small firms. In a personal control is a personal approach by a communication, by treating them into a dinner, a lunch, gather them into some outbound activities, and creating emotional attachment between the manager with the staffs through a communication, close relationship, and so on. In a hope that if there's some emotional attachment, then the staff will be more loyal, the staff will more better in doing their job, and so on. And the second one, bureaucratic control. This is a system of rules and procedures that direct the action of subunit. In a bureaucratic control, the company is itself creating some code of ethic that need to be followed by and then need to be adapted by the employees or their staff. And if they against or crossing the line or crossing the border, they will face some consequences, and then they need to be fired if they have made a lot of mistake. And then the third one, output control. In the output control, the manager will try to set a goal for subunit to achieve and expressing those goals in terms of objectives and performance metric. So they will create some kind of key performance indicator. They will create some metrics to measure the achievement, whether the employee fulfill a target or not. For example, like in this year, you have to make sure each of the salesperson should achieve 10 million per month. And then if they don't achieve, it means they not successfully fulfill the output control. And it will be influence their bonus, their end year bonus. And then the other example is that in order to receive more reward at the end of the year, they should be attend or they should be present in the office, for example, minimum less than 10% of absent. Yeah. And then this is an output control. If more than 10%, just for example, or more than 20%, it means they are not fulfill the KPI and they will not receive their reward at the end of the year. That is output control. And the fourth one is control from culture, or cultural control is access when the employee buy into the norms and value system of the firms. The strong culture implies less need to others form of control. So in a cultural control is usually related with the organizational control. It depends on what type of organizational control being adopted by that company, because they are one of the cultural control type. For example, clan organizational type is talking about the people in that organization really loves to communicate, really loves to interact, really loves to bonding to each other by gather, have a regular meeting outside the working together through arisan maybe, or maybe they will hang out together after the working time, and they will visit each other families, visit someone who gets sick, and so on. So there will be emotional attachment between them, there are bond between them, and this is more on personal bond. If one of the employee are not in line with that kind of control, that kind of culture, they will be outside of the circle. Then it is called as the cultural control. And then this slide will talk about incentive system. Incentive are the devices used to reward behavior, usually closely tied to performance metric used for output control. Yeah, for example, if you achieve 10 millions per month for 12 months, and then you will receive bonuses for 15 million rupiah, and it is called as incentive. And then incentives should be vary depending on the employees and the nature of the work being performed, should be promote cooperation between managers in subunit, should reflect national differences in institution and culture, can have unintended consequences. So if you are not fulfill something, you will not get your reward. And the last one of this slide talking about, we still have another one, organizational structure. Before that, we're talking about process. Process refers to the manners in which decisions are made and work is performed. Many processes cut across national boundaries as well as an organization boundaries. The process can be developed anywhere and can be informal or informal integrating mechanism to help the firm leverage process. And the last but not least, the organizational culture. Organizational culture refers to the values and norms that employees are encouraged to follow and involve. And organization culture can be maintained through hiring and promotional practices, reward strategies, socialization process, and organizational culture tend to change very slowly. The example, Universitas Atmajaya Yogyakarta have one of example of organizational culture that we take from the values of unggul, inklusif, berintegritas. And we always make sure that the students is always have some integrity every time they do their work, starting from their personal assignment, daily tasks, or maybe weekly tasks, or when they do something with their teamwork, including their final project such as thesis. They have to make sure they are the person who made all the assignment individually. They're not buy it from external. They're not asking someone to help them to do it and pay that person. They will not using jockey, or they will not cheat during examination. And if it's happened and it's outside the organization culture, there will be some consequences. And if they do everything well, there will be some reward. The manager in companies with a strong culture share a relative consistent set of values and norms that have a clear impact on the way work is performed. The strong culture is not always good, may not lead to high performance, could be beneficial at one point but not another. The companies with adaptive culture have the highest performance. So we have to make sure that if we want to create some specific organizational culture in organization, it should be also followed the environmental change. We cannot always stick in the organizational culture that very conservative, not paying attention to the human changing, not pay attention to the market changing. So we have to create something that really flexible, and not often changing, but we are always head to something that getting better and better and has some sensitivity to respond toward the market and the people who works in our company. That is a wrap, everyone. Thank you very much for listening and have a nice day.